For decades, 401k investing has followed a simple formula: stocks, bonds, and a target date fund. But that model is starting to change. Large employers and plan sponsors are beginning to explore alternative investments inside 401k plans. That includes private equity, private credit, real assets, and diversified private market strategies. For many investors, this raises an important question: should alternatives have a place in retirement accounts? The answer isn't automatically yes or no. It depends on understanding what these investments are and what they are not. Alternative investments behave differently than public stocks and bonds. They are typically less liquid, more complex, and designed for long-term ownership. They don't trade daily, and their values are often estimated rather than continuously priced. That can reduce short-term volatility, but it also means investors give up flexibility. Before allocating to alternatives in a 401k, investors should understand several key issues. First, liquidity. Most alternative investments restrict access to capital. Ask how often the investment can be valued, rebalanced, or exited. In a retirement account, limited liquidity may be acceptable, but it should never be a surprise. Second, fees. Alternative strategies often carry higher management and operational costs. Understand the total fee structure, not just the headline number. Ask how fees impact long-term net returns. Third, transparency. Private investments don't disclose information the same way public funds do. Ask what information is available, how performance is calculated, and how often it is updated. Fourth, risk. Alternatives are not inherently safer than stocks. They introduce different risks, including leverage, credit risk, and manager execution risk. Make sure you understand what drives returns and what could go wrong. Fifth, allocation size. Alternatives are typically meant to complement a portfolio, not replace it. Ask how much exposure is appropriate given your age, income needs, and time horizon. And finally, governance. Ask who selects the managers, how they are monitored, and what happens if performance deteriorates. Good oversight matters more in private markets than anywhere else. Alternative investments can offer diversification, income, and long-term stability. But they are not simple products. They require education, patience, and realistic expectations. For retirement investors, the goal isn't complexity. It's resilience. At Private Roots, we focus on helping investors understand how institutional strategies translate and where they don't. Because the most important question isn't whether alternatives belong in a 401k. It's whether you understand what you're allocating to